thing that we want to focus on mainly with anything with ICT is we want to focus on ranges, right? There is a fair value gap, isn't in fair value, or is not a fair value gap unless it is in discount or premium of whatever range you're trading. Right, so we can take a look on this hourly chart, right? You have what defines a range, first of all? It's a swing high and a swing low. So, right, so we have the swing high and we have the swing low. You can also delineate a range with a Gann box tool. It's really cool. You can have 50% defines your midpoint, right? Or the consequent encroachment, whatever you want to call it, right? Just 50% of your range, right? Above the range is going to be optimal for shorts to go short. And at the bottom of this range is going to be optimal for longs to go long. Because, right, it's kind of think about it as, I'm trying to get a good, it's like if you own a warehouse, right, and you're selling goods, you don't want to sell your goods at a low price. You want to be selling your goods when the price is high, right? And that's the same thing, right? Once you sell your goods, your stock or your inventory goes down, right? So you don't want to buy those goods back at a high price here, right? Why would you long over here? What your RR doesn't really make sense. You don't want to buy your goods for whatever higher price and then sell it for an even higher price, right? Your profit margin is not that high. But if you are selling your goods at a higher price and then buying them back at a lower price, then you're making profit. That's a little analysis for y'all. It's kind of same thing with volume price, right? But that's not what we're talking about here. We're talking about those ranges, right? And then price also within these ranges, price moves from external liquidity to internal liquidity. Your external liquidity defines any swing high or swing low. And your external your internal liquidity is defined by anything like a fair value gap, order block, volume imbalance, you name it. So right here, right, what did price do? We came down, we took this liquidity, was our external liquidity. We came down, took this out, started moving back into internal liquidity. We could have taken this range again, right? We can mark this out as a range right here. What do? We had this range over here as well. Cool, we took this external range over here. Let's mark it out like this. We got this range now, right? So price came up through internal liquidity up to external liquidity taken out. Cool, now this is our range, external, internal. We came down, we didn't necessarily tap a fair value gap, right? Because we still have this range right here. And we need to retrace back into it. So we come up, take this internal, come up for this external. We're within internal range of this bigger range, right? It's kind of like a rangeception. There's so many ranges within ranges, especially if you're looking at a higher time frame. If we drop down to the 5 minute, there's probably going to be even more ranges within those ranges. And then 1 minute, you name it, right? But that's where we start looking for our setups. We don't want to long in premium, and we don't want to short in discount kind of thing, right? So we don't want to short over here, and we don't want to long over here. We want to long over here and short over here, depending on which range you're looking for, right? So like in this range where this red is, this is where we want to take our shorts, right? Because we are within this fair value gap, all right? Fair value, because it is in discount for shorts, right? We hit 50% of it, sell back down. We took the external of this range, right? So now we can look for internals of it again. We are in internal range of this, right? So now internal back to external, right? So where's our external? It's down here at the bottom. That's our range right there. Look at that. Internal, back down to external. Now we have another range. Now back to internal. What did we hit over here? Is that a fair value gap I see? Yes, it is. Hit this over here. Back down to external, internal, external. Hit this external, right? That's our range still, right there. Can delete some of these. This was our previous external now. Right there, came back down. Where do we move? We move to internal ranges, internal, internal. Cool, internal, we're looking for external. More internal, we're looking for external. Keep going, we're right here. Almost hit it. And then we're also, we have this range in here too. So cool, we hit top of this range right there. Sell back down, external, back to the internal liquidities of this, took this, and started going back up. And this is what we have been on. Seems like we're finally breaking out of that. Now we finally took this external range. We still have this external range. We have all of this internal liquidity. Definitely keep doing these. Yeah, right. So we took this. We still have this big range, right? Let me define this range now. This is our, oh gosh, not that. I want a Gantt box. Right here to right there, right? That's what it used to be, right? This is what it used to be, external, boom, to internal, reject that back down. So now we're looking at an even bigger range. We're gunning through all of these internals, externals. So now this level is important, right? We took this level now. If we don't, we're kind of displacing above it, right? We had this big move through it and we're holding so far. So if we do come back below that level, we can probably expect it to retrace down somewhere into here, into these internal liquidities again. If we want to go down to this, that's going to be that external, back through internal. Or since we've already kind of pushing through these internal liquidities, this is a very likely external liquidity that we want to hit. So we shouldn't be surprised if we go like this and then sell back down, right? I don't know what my tool is doing. Whatever. External to internal to external, right? Or to internal to external again. Just keep on moving. And just mentioned demo mode. I was like, yeah, I can draw with this little tool, right? We have our ranges, whatever. Let me go back to this. So let us drop down to, let's do the 15-minute. 15-minute has really solid setups that we're able to look at. Indicators are very helpful, right? They can help you kind of see a fair value gap that you might miss, like a super tiny little fair value gap that you might not notice with your bare eye. You shouldn't rely on them for your trading completely. We're diving into some fair value gaps. So indicators, as helpful as they are, at the end of the day, all of them are lagging, right? There's no indicator that's kind of beating the market unless you're trading with, Trader's Paradise, Matt from Rocket Scooter, which he has an awesome indicator. He's built a great platform where it actually shows you, high volume levels, like market pivots, things like that, right? Those are like leading indicators, right? But you can define those levels by yourself. And, Shane has a great document, has a great PDF on Insider Trading Community that you're more than welcome to check out, biptraders.io. I believe we're doing a special for $9.99 for a week. So you're able to take a look at that, take what you need, take what you want to learn, and then we just want you to grow. But anyways, you can define those high volume pivots yourself by going on to a higher time frame, as that's where, institutional trading happens. Just kind of marking out some levels. Now, on the 15 minutes, all right, so we have kind of just like a naked chart. Let's switch over to regular NQ because I'm looking at the March contract just so that we have more data. Let's scroll back to a random day, right, and kind of start defining those fair values and what is not fair value, what is fair value. So over here, right, say we have this range, right? We have our swing low to swing high to swing low. So what do we have here? We have this fair value gap, right? Or quote, fair value gap. We have a gap in price here. Right there. Marked out with this gray box. I can even change the color. Let's make it this blue. Right? That's our quote fair value gap. Right? So we are able to see whether or not price holds this. Right? If price holds this, cool. It's a bullish PD array. At the end of the day, any like gap in price or order block, they're all PD arrays. And let me remember the definition of a PD array. It's a price delivery algorithm or whatever that translates to. So we have this range, right? We still have this gap down here. Now this is an actual fair value gap. Premium discount rate. There it is. Thank you, Shane. So PD array premium discount rate. All right, so this is an actual fair value gap that is in discount. You can take longs over here, right? You can surely, if it's holding, then it's holding, right? And you can make whatever amount you want to make. But like the example that we just talked about, you can make your profit over here, or you can make your profit over here. You know, it just kind of depends on what kind of business do you want to run? Do you want to run a profitable business, or do you want to run a semi-profitable business, right? At the end of the day, that's what it comes down to. You're treating trading like a business. You're defining risks. You're defining what's going to put you out of business, what's going to bring profit to your business. Let's keep going. Thank you guys, by the way. Thank you for watching, for sharing. If you're enjoying this, if you think this is bringing you value, make sure to give it a quick little likey poo, quick little repost. I'll keep doing these. So let's keep going, right? What do we have? And also, one thing that we want to look for is displacement and like liquidity sweeps. There's liquidity sweeps. A fair value gap is really awesome if you have a liquidity sweep, right? So you have liquidity sweep over here, kind of another liquidity sweep over here too, which is this one is more likely, right? We have liquidity sweep right here. We have this little reversal. We have this fair value gap. Why is that fair value? Because it isn't 50%, right? This bottom half, you don't have to take that. You can kind of wait for it to come more into this discount range, see what you have within the discount range, right? On the 5-minute, I'm sure we had a little bit more of a fair value gap in here. And that's kind of the thing that you can play around with, right? You can take a hourly range. You can see if it has a lot of gaps in the price, then it's like, all right, cool. I don't know which gap to take. You can drop down to a 15-minute or like a 5-minute and kind of find more of an ideal entry point within that discount or premium range for yourself to take. We're defining our ranges as we move on. Swing low to swing high. Where did we retrace to? Within this range, we retrace down to this order block or breaker. We'll go over order blocks and what those are in a later session. So, right, swing high, swing low. Why didn't this first fair value gap hold? Well, because we had this one below, right? Why didn't we just bounce out of this one? Like come down to 50% of it, bounce out of it? Because it wasn't fair value. Now this one is in fair value, right? Our very first gap in price, fair value. You can always, you don't discount the price not coming down to this one, but like always plan on it kind of thing. But you can always just make sure that it is in premium. And look how well the 50% of that range held, right? So we hit this in our premium, in our discount. And then boom, that's your long setup. Same thing over here, right? What do we have here? We have this range. Let's define that. Look at that, below 50%. That's our discount. It's our discount for long. What do we have over here? You have a nice little Timmy candle. And we also have this fair value gap, which is kind of, it's like borderline for other support levels or for other PD arrays within those ranges. Okay, whatever. We keep going up. So now we have this range over here. All right, don't quite retrace into the discount of it. So cool. So there's no trade for us. We don't have to take it. Right? If it's not matching up with our model, why do we want to take it? be at this liquidity below. Cool. We swept this liquidity, right? We took this external range. What do we want to do? Probably want to retrace to internal a little bit, retrace into internal. Now this is our new external range. To that one, internal, back down to external. Within this range, what do we have? We kind of want to, okay, cool. Do we have a long setup here? No setup. So we didn't retrace into it or anything. I'm sure on the 5 minute, right, you have a little bit better range definition and seeing where price can bounce or whatever. But we're just looking at the 15 minute right now. Over here, what do we have? We took this now external to internal. We have a lot of this internal liquidity right there. Right. Oh, cool. I kind of want to long, see what happens. All right, let's take a range on it. Swing high, swing low. What do we come down to? 50% over here. Okay, cool. We can long out of that. What do we have in there? We have a fair value gap. Why is it fair value again? Because it is in discount, right? Come down, take these, take some of these again. All right, now we have this range over here. Can we short out of it or can we long out of it? Well, we haven't displaced this level. We haven't taken this out, right? So why would we want to short if we retrace, right? We have this small gap in price, but is it in fair value? Not for shorts, it's not. We don't want to short there. It's cool. We move on over here. We have this range now. All right. We might be able to take a long over here, which a little bit, right? We retrace a little bit, but there's not necessarily like a setup. So, all right, we keep looking since we took this high. All right, this is our range. What do we have within our range? Boom, look at that. All right, and that's kind of like, this is where, like on these smaller gaps, that's where it is nice to have an indicator. But if you're looking at raw price action yourself, it is much better to do it that way, to train your eyes and to kind of just like go in, backtest this, backtest, 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 just so that you're used to kind of seeing those smaller things in price action when they happen, especially when they happen live, right? It's one thing going over this and kind of seeing those examples in hindsight or anything, but seeing it in hindsight will help you seeing it in live price. So right there, we hit this fair value, right? And back again in our discount, we took this liquidity, displaced down, formed a fair value gap. Cool. We can continue looking for our shorts. And that is another thing that I want to mention. Let me grab a quick drink of water. We don't want to be looking for opposing external liquidity unless we've had displacement, right? So over here, this was kind of our range, right? This was our range initially. This is the range that we had initially, right? We have our external liquidity. We initially took this, or we haven't taken this yet. This is the range that we're focusing on, right? Without looking at anything on the left, this is the range. We took the external of this range. We could not displace above it. That means we're not going up higher. So we're going back down, right? We retrace a little bit. Okay, cool. Let's look for a short setup. What do we have? Fair value gap because of the displacement. We have a market structure shift. We'll dive deeper into that later on. Probably in the next episode or something of these little ICT gem series. So we can't take that. We retrace into the discount of shorts. Cool. We got shorts. This held. This is our bearish PD array. All right, we can start looking for that other external liquidity because we don't have that much internal stuff. We don't have anything internal that can possibly hold this price up and make it go higher. Cool. Retrace back down. Right over here, you can start looking too, right? What do we have if we just take this little range, swing high, just swing low, we come up, we retest this order block. All right, cool. Let's sell back down. Let's find another range. And it can retrace, price can retrace into deep discount. It can give you real, like on this one, right? This is our kind of reversal range. And this is where you can start playing around with some OTE, right? Which is optimal trade entry. We're looking for fib levels to hold certain levels in order to, project price, right? So like if we take this one, we can like put a Paper traders, boom, -1, right? And this is where it kind of like, okay, is this in discount? Is this a premium? It's sort of OTE gives you more of a defined discount range for whatever trade you're taking, right? It gives you a nice discount for shorts. It gives a nice discount for longs, kind of outlines the area. And you can start playing around with those as well in terms of, does this OTE line up with a fair value gap, right? Is this fair value gap even in fair value? If you don't have anything in fair value, right, to take, you can throw an OTE on it and see like, all right, if this comes down into here, I can purchase my inventory here, right? This is where I want to buy inventory. This is the perfect price, perfect time, perfect place kind of thing, right? So over here, we also want to notate, so right there, there's a fair value gap. We retrace deep into it, deep discount. We still hold this fair value gap, right? See how the bodies respect it. That's another thing that you want to notice. How are the bodies reacting to those PD arrays? Are the bodies respecting those PD arrays? Or the bodies respecting those levels, right? Same thing of, like with any level that we outline. Are the bodies respecting it, or is it wicking through it and not holding above it? Same thing over here, right? We just wicked through it. The bodies held it. As ICT says and said, bodies will tell the story and wicks do the damage, or wicks do the damage, bodies tell the story. This is where the buying and selling happens, right? Within those candles. The wicks are just like little manipulations to trap traders to do whatever to shake you out, right? Because at the end of the day, the whole market interaction comes down to the interaction between the buyers and the sellers, right? And that's why we have those premiums and discounts, right? If you are a buyer and you're buying down here, right, you want to have a seller that's looking to sell within their discount range, right? Because they're not going to short over here. If you're buying over here, you're taking your inventory, right, and you're selling it to someone that's wanting to buy it. Boom. Somebody that's wanting to buy it and take it back down, which doesn't happen in this case, right? Reversal, but just that interaction itself, that's what we need to understand, is always that there is somebody on the opposite side of that trade. If we are selling something, there needs to be somebody to buy it. If somebody's buying, oh my God, if somebody's looking to buy something, then they need to have a seller for that item or whatever we're looking for, right? Just putting it in layman terms, like items, not necessarily contracts, which we can go into that too, right? Contract buying, selling, whatever. That's for options. Let's keep going over here, right? We can take this whole range. Look at this. So this whole range, right? You don't want to be buying up here. You have this consolidation. You don't want to be buying up here. You are way better off waiting for price to retrace and tap you in, this is where, right, we can take of the range if we don't have anything. And we want to look for those 618, 705, 786. Look at this. This is in discount. These levels are all in discount. This is where we want to long out of, right? Or short if it were reverse, but this is where we want to take our trades off of. We want to be in discount. We want to make sure our inventory is as cheap as possible before we start selling it to people. Boom, we buy cheap inventory here. Cool, we're taking it off over there. All right, and this is our external over here. Come down to internals. Cool. We hold internals. We're looking for more externals. All right, we take those over here. We go back down to internals, and that's just on repeat. All right, just engraving those concepts is insane. Let's see how long I've been fucking yapping on. I've been just about 40 minutes. I appreciate that. Thank you. I appreciate it. I'm getting some feedback right now, guys, from people in Discord, and I do appreciate that, STV. Truly. That's like, if you're passionate about something, just kind of fucking comes out. Let me read over some chat over here on the trade breakout directors. Change, but this very well. Doesn't change everything. You're trading more breakouts, right? But if you don't see a breakout happen like we did over here, right, you kind of wanted to see, right, if you were looking for longs and you're looking for this level to break, right, and a breakout or a breakout doesn't happen, you can look for shorts upon a reversal, right? If this price target doesn't hold, then buyers aren't willing to buy up here, right? They need to restock. They need to come down. They need to restock their inventory before they start selling again. Like Shane is saying, that's why displacement is so important. That's why we want to notice those big moves, right? This was a huge move down, right? What do we have? We had a huge fair value gap over here. We had a nice little market structure shift right there. Is this above 50% of this range? It certainly is. What do we come up? We're still holding this, right? Over here, we're still holding this. So you can take some shorts over here, right? You can take a little bit. You don't have to be like super greedy about it. You can take a little bit, right? This is still working, right? Whatever liquidity you're taking it to, wherever you want to exit. All right, for those reversal trades, that is really, really good. If your breakout trade doesn't work, kind of thing. Change everything. No, fair value gaps aren't necessarily better on short-term timeframes. They're helpful in terms of if you're looking at like key levels, right? If you're looking for those liquidity sweeps, then you can drop down to a shorter time frame. But fair value gaps, they apply to anything, right? We can go up to let's go up to the daily time frame. Let me get rid of this stuff. Actually, not those levels. So let me get rid of those ranges, right? No, so I was saying like external is going to be more of like your liquidity, right? Your swing highs and swing lows. And then your internals are going to be things that are PD arrays, right? Premium discount arrays. So those are going to be your fair value gaps, order blocks, volume imbalances, you name it, right? All of those other terms, anything that is not a liquidity, anything that's not a swing high or swing low kind of thing. Yeah. Yep. Exactly. It's kind of like, and you're always wanting to trade from something to something, right? So from something to something, we're talking about if we took a liquidity or if we took a long on this internal liquidity, what is something that we're looking forward to catching, right? So like we were saying, price goes from internal to external. So if we're trading from something to something, we're trading from this internal liquidity to this external liquidity, right? And there's max. So there's your daily range, right? You have this daily, you have your discount in the daily range, you have your fair value gap right there, right? You have another fair value gap right here. Just more of like, right, some of it is above, some of it is below. And that's where it's like, if you're a little unsure about those, throw a little OTE on it right there, right? And if you move along, look how well that 705 held. You're still within that fair value gap, right? You're in the lower portion of it. And now you are within that OTE. And that's where you can long from, right? Now we're going from something, we're going from this internal liquidity to now that external level up here. Now we can take account into this range, right? The current range that we're trading. We're hitting discount. Like we've been hitting these discount levels over here. We've been holding stuff over here. So if we're holding stuff over here, what is the next thing that we want to do? We want to take external liquidity if internal liquidity keeps on holding. Internal liquidity keeps on holding, external is next, right? Like we were mentioning previously. Come up over here. If we don't displace, we're looking for internals again. If none of the internals hold over here, we're looking for externals again, which is going to be bottom of that range. All right. Does that make sense, Maxo? Or is to be too? Awesome. I love the feedback. Yeah, like it's one thing reading something and there's another thing of like actually seeing it and actually having explanation to go along with it. I appreciate that. I mean, we're planning on doing these probably on the daily. Yeah. We want to make sure that the word gets out. We want to bring value to trading. We want to, we want to make sure that everybody's learning and not just taking fucking alerts, right? We want to actually teach people. You teach a man how to fish, you feed him for a lifetime. Give a man a fish, you feed him for one day. It's kind of just depending on the ranges, right? We have on the daily, right. STB just asked me a question of how do you know when we're ready to go for externals again, right? If there's like some sort of definition of if, or a tell whether or not, an external is going to fail or whatever. It's kind of just looking from that top down analysis, right? Right now we're in the daily, right? We have this range, swing high to swing low. We had this internal hold right here, right? That's our order block right here. So this internal is holding, right? But if we drop down to a 4 hour, let's keep account of this range. Let me answer you so that we can still define it, but we're also looking at the ranges that are happening right here, right? So what do we have here? We have this range within the range. So this is our range right now, right? We came out, or this was initially our range. We had external liquidity skim down. Cool. We took this external liquidity. So now this is our range. So now we go from external liquidity, from this liquidity back down to internals. We haven't hit this external yet, right? So it's kind of just a range that keeps on expanding and growing continuously. So right now, right, we took this liquidity over here. That was more of like a possibly internal liquidity, right? Or you could have taken this liquidity, you could have taken this range now. So we took this, so we went back to internals, right? So we're still within kind of like this little range right here. We took this internal back to internal or external, or gunning for externals, right? Internal. You can even define this range right here. We're retracing down. We want to look for externals. We haven't taken any externals yet, so we're just traded through internals from external to internal. It's just kind of defining the timeframes that you're looking at, and also defining of what you want to just trade, right? All right, so now at what point do we expand to external? That's where you kind of probably get into that concept of time and price or news drivers or whatever, right? What is going to drive the market to push for those external liquidities? A lot of like ranging is happening. Now we're looking for more internal liquidity. We retraced down a little bit, took internal liquidities. All right, now we're looking back for external liquidity. Does that answer the question? Also looking at fucking patterns, right? We're going from external to internal, from internal to external. So if we're taking this range now, we can take this range, right, as a whole from here to this bottom. We're still within the big daily range, but now it's like, okay, cool. We took this external. So now we're within internal liquidity of the bigger range. So we can look for externals again, or we can look for internals. That just depends on whether or not we hold this level or not. Hold above 22,132, or sorry, no, 22,111.25. If we hold above that, cool. That's your breakout trade, right, Maxo? You want to see it come up, whether or not it's holding or not, right? You want to see it either just shoot for that, come up, retest this, make sure it holds, come back up for that external. Or if we don't hold above this, then we're looking back down for these internal liquidities, which we're kind of building up these a lot of engineered shit down here. Been going on for about an hour. You can just take whatever questions and we'll probably end it here in a few. But I appreciate everybody that's tuned in over here on X. If you are enjoying this, if this is bringing you value, if you want to see more of it, make sure to give it a little like to show some support. Give it a share, repost, whatever you want to do with it. Tag it, give it a comment of how we can improve what you want to see. We'll answer any questions on here. If nobody got questions, then hell yeah, thank you, Maxo. I appreciate that. And yeah, this should be still up on my Twitter feed, so you'll be able to rewatch it. I'm trying to think of what else I want to say. Yeah, that was a good lesson, right? On internals, externals. Next time we can dive into some order blocks. We can dive into those liquidity sweeps and displacements, and still keeping count of what we learned previously, right? What we learned from today's session. So still applying those ranges, still applying external to internal, but now we're going to add on those order blocks and, other entry models. What other techniques pair well with fair value gaps to study? I think OTE, honestly, like if you take your fib tool, whatever you're on, delineate 618, 705, 786. Those are going to be solid because they kind of help you see the range, right? You don't even need to have a GAN box outlining a range with this one, just because you have your 50% of the range marked out already for you. Anything below it is going to be discounted, and that just kind of depends on what you're looking for. Our stream times are mainly Eastern time. We just go based off of market hours, but anywhere from like 9 Eastern up until like those late night streams like we're doing right now, like it's fucking 12 a.m. on the East Coast. So it just depends, right? Sometimes I typically do an early morning stream, just kind of go over market analysis of what we got going on in the morning. And then at night, we do those reviews, we do those teaching lessons. And then, yeah, that's about it. We should be back on, Valentine's Day tomorrow. Shane, you got any plans for tomorrow? So let me pull this up real fast. Let me pull up a little thing to show you guys. All right, let me switch gears over here. So we're going to switch over from our trades to little window capture. Okay. We're going to go into here. Let's see. This is what we want to see. Let me adjust it properly like that. Cool. Let me move my video right there. All right. So if you look in your left corner, there's www.papertraders.io. That is the website that Shane has built from the ground up. He poured the fucking foundation, put blood, sweat, and tears into this shit. So go show us some support on it. But as you will see from this website, you're able to go access the Discord. You're able to see the trades that we're taking. You're able to access the library if you're a member, and Trader Vlog, which is awesome. Right, this is what we want to see. Trader Vlog, that's what I'll be using to journal my trades, and I'll show you guys some more of that in a later episode. But this is the most important thing that you want to have, a little risk calculator, right? If you're trading futures, if you're trying to pass an account, or if you've already passed an account and are just looking to grow, you always want to make sure you're defining your risk. You're able to select a pair that you're trading. All right, so let's say NQ. That'll select my account size. I'm trading 150. My risk percentage over here. And this will tell me what my account risk is. So with these, typically with an 150, you have a $5,000 drawdown, right? You don't want to hit that. So technically, your account is valued at $5,000, right? So we want to make sure we're not taking more than like $1,000 worth of risk on it. All right, what is our stop loss? Right here, we can define value per tick, right? $20 tick size, 25, margin required 17,000. This will tell you what you need to know about risk. This will tell you how much risk per contract. Phenomenal tool, right? If you prefer dark mode, let's switch it over. So I just got a note from our admin panel that this is a continuously evolving project, right? All of this Paper Traders, this is a continuous evolving project. Trader Vlog, it's literally in the beginning stages of it, but it is such a great tool already that what you get now for the value that it's priced at, it's you want to lock that in because you will have that for life. All right. But these ones on this risk calculator, soon there's going to be a feature that's going to allow you to define what prop firm you're trading, and then it's going to base that risk off of that. So if you're not in yet, make sure to join in. I'll give you a quick little secret. This guy by the name of @BigTimmyHedge on Twitter, I'm following him. I've tagged him in my previous posts. Go check him out. He has a little link in his description. What you want to do, you want to click that link and you'll get 50% off for lifetime. That is a price that you get locked in at for lifetime. The prices are just going to keep on going up. So if you're locking in, which, hint, nudge, nudge, the Timmy discount gives you $20 off. So you're going to be paying $20 for a risk calculator, a library, plethora of educational content that's to come, and the trader log, which, if you're using TradeZella, that's going to cost you much more than what you're going to be paying here. But anyways, enough with like promotions. We appreciate you guys so much for tuning in, for the support, for everything that you do for us. The likes, the retweets, the feedback that we get from you guys. That's all helping us grow. So we appreciate you for that. Thank you so much for tuning in, for enjoying this. We will be live tomorrow morning. I'll see where I'm at tomorrow night. I might have to might have some obligations, but I'll at least try to squeeze in maybe like at least 30 minutes. We'll do a quick class for that. So do that tomorrow night. Tomorrow morning, we'll do a little pre-market analysis of kind of what do we have, what did we do overnight. So we'll go over that. And then, just look out for more of these lives to come. We'll plan on doing them every day. On the days that we don't do them, there's still going to be some sort of content coming your way. There's always improvements being made behind the scenes. Thank you so much for tuning in. I hope you enjoyed it. Give it a like, give it a little repost, share, whatever you're watching this on. Like starting to lose my voice. But thank you so much, guys. We'll see you next time.